Everybody, this is Jim at FreeChartVideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only. It is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I am not a licensed professional, just a guy that draws lines on charts. And we're going to look real quickly. There's not really that much that happened today, but we're going to look real quickly at the S&P 500 chart. And here it is. This is a 30-minute chart. It still looks like we're in this descending wedge pattern. And if this wedge plays out as they typically do, the S&P should not get lower than the apex of this wedge, which I'm going to say is in the mid 1240s to mid to high 1240s. I'm kind of expecting some support here at this 1250 area. If this blue line breaks, that held today. Look where it bounced, and I did not change these lines at all since yesterday's, or rather since the video that I did at the end of the close on Friday last week. I actually did the video over the weekend. So it looks like the S&P is in this little descending pattern. You know, I kind of am thinking if this line does break, then maybe it still stays between these lines. But I believe the outcome from this pattern will be a move over this top red line. And if this pattern plays out as they typically do, that would set up an eventual challenge of something in the 1330 area. Now, I want to remind you, as we look at a longer range chart here, looking now at this line kind of moved around on me a little bit. Tell you what, I'm just going to get rid of it. I want you to be aware, however, that if we do rally up to, let's say, the 1330s or even close to 1340, but fail to put in a higher high than this 1370, then we need to probably draw a potential head and shoulders neckline right here. And if that were to break, then we are in for some little bit more serious selling pressure to come. But that's preliminary. Right now, let's just see how this little wedge thing is going to play out. If it plays out, let's get rid of that line too, because that's just playing with possibilities. Obviously, you can see that this orange line that broke from the that line started here back on 3.9, crossed the right shoulder of this pattern. That has broken down, but I want to remind you that you don't always see that those extreme lows or extreme highs in reversal patterns holding up for as a long-term valid channel point. What do I mean by that? What I mean is this red line right here may end up being of more use to us down the road if this bull run were to continue. Got to watch it real carefully here. Again, I'm looking for a short-term bounce that could possibly turn into something longer term, but no way of knowing that until we get there. So for right now, I'm looking at this wedge pattern, descending wedge, and I'm looking for that pattern to break out to the upside, come back for a back test, and then start to move up again, and see where the S&P, if it can gain a little bit of strength coming up here in the next week or so. Look, appreciate you watching this video. When you get a chance, please spend a little time at FreeChartVideos.com. I do this as a free service to those people who like this kind of technical analysis. And I want to keep it free. So I would appreciate it if you could swing by freechartvideos.com with your web traffic and tell your friends. I appreciate it. Thanks. Bye-bye.